Recording in progress.
Hello, good day guys. Welcome to today's webinar. We have been waiting so long for this webinar on the Gold Mega Leverage. Now, we currently have a promotion running, which has to do with our 500 times Mega Leverage on gold here. So I want to urge every client, this is one bonus that you need to take advantage of in case you haven't funded your account. I mean, gold is one pair that everyone loves to trade because you profit from gold easy, and it has good volatility for making quick money. So I want everyone to have their accounts funded because whatever messages, whatever educational content we're giving today on gold leverage, on gold rather, is going to be beneficial when it comes to your trading experience. So in my best interest and in everyone at Zetradex best interest, is advisable that you take advantage of this gold leverage. So it's something that everyone has been waiting for. We've been getting a lot of requests about increment of leverages, and we chose to add something for our gold traders. And because gold, of course, is a pair that everyone trades on. So we all should get our accounts funded, standard account, Z Pro, Z Ultra, B, whatever account you have on, get it funded and get ready to participate in our gold 500 times Mega Leverage. So with that being said, let's begin today's topic. We will be starting. Today is the first chapter, of course, but then after we will go down to something very much more beneficial. We have a series. We have chapter 2, chapter 3, and chapter 4, of course. So today we will be talking about currencies on many emerging countries, rely on how to determine values of currencies and all of that. We're speaking about gold rush, important economic indicators for the United States dollars. Now, how often have you heard the phrase, the dollar is the world's reserve currency? Well, the reason behind this is that some countries actually peg their currencies against the US dollar. Why, when a country does this, the government agrees to either buy or sell their currency at a fixed price versus the dollar, while the government can increase and decrease the supply of money. They are still subject to having the equivalent amount of dollars in reserve. This process, of course, magnifies the importance of the dollar around the world because it actually means that some economies are entirely dependent on the dollar. So if the dollar's value were to stage a massive fall, it would produce a wide-reaching negative effect in all the other countries that are pegged their currency on the dollar. Now, important economic indicators for the USD, we have the GDP, we have NFP, we have retail sales, we have CPI, Consumer Price Index, we have personal consumption expenditure, PCE, and we have, University of Michigan consumer sentiment, although it doesn't come up every time. But let's take, for instance, the NFP. The NFP employment report measures the change in the number of employed people in the prior month, and the gross domestic product report is the measure of the country's total value of all final goods and services. Now, the headline retail sales report measures the monthly change in the total value of sales at a retail level. Now, the core version of the report, on the other hand, excludes vehicle sales, while the CPI measures the change in the prices of a fixed basket of goods and services. Now the core account excludes about food and energy prices because of their volatile nature. While we talk about personal consumption expenditure, PCE, which is very similar to CPI, of course. It measures the price changes of US consumer goods. The reason why you should look at this report is because it is one that, the first look at when making decisions regarding monetary policies, and we all want to be in such cahoots. Experts. Now, what moves the United States dollars? One, we talk of gold rush. Gold rush. Very important. Now, whenever the dollar is at risk of losing its value due to inflation, investors turn to XA USD gold for safety. While unlike most financial assets, gold maintains its intrinsic value. Gold is gold, of course, and it's the same everywhere. So when gold prices are rising, it could be a sign that the dollar, of course, is losing its appeal, its significance, its importance, right? Now, speaking of economic developments in the US, now, fundamentally, positive economic developments in the United States attract more and more participants to invest in the US, as investors would, of course, need to have some dollars to be able to transact in the US. So as the demand for United States investment increases, the demand for the greenback also rises as well. All right, next page, please. We talk about capital inflows and outflows. Now, with respect to Japan and London, the US probably has the deepest and the most advanced financial markets. And this provides the many kings, sultans, billionaires, heirs around the world, many types of investments which they can choose from. So in order to invest in these American assets, investors would first need to convert whatever money, currency they are holding in to US dollars. Of course, the capital inflows and the outflows from the US financial markets can have a very significant effect on the value of the dollar. Speaking of economic developments around the world, also very importantly, since the USD takes up about majority daily currency transactions, just about any major development in the world, that is, we have strong GDP growth in Australia, stock market crash in Beijing, or maybe Godzilla attack in Tokyo, which affects short-term valuation based on economic developments all around the world. We speak also of bond yield differentials. Bond yield differentials with investors are looking for best deal for their money. It is important to keep track of the differences in the yields of bonds of the US and other foreign countries. Now, if investors see that bond yields are rising in foreign countries, while yields in the US are staying steady or going lower, investors will move their funds out of the US bonds, selling their dollars in the process, and they begin purchasing foreign bonds, right? Now, we speak of rumors on the interest rate grapevine. We have market participants who pay attention to interest rate trends. And we advise our clients to also do that, because if the Fed is expected to raise interest rates, this significantly means that demand for dollar-denominated financial assets, for instance, treasuries, they could rise, which would be bullish for the dollar, of course. Now, if the Fed is expected to cut interest rates, it could lessen demand for these assets, and we could see investors move their funds away from the dollar. Now, since Fed officials usually drop hints about the central bank's future interest rate moves, traders are all ears during policymakers' speeches. Now, speaking of trading the USD as the base currency, we have USD, for instance, USD CHF, USD CAD, USD ZEC, USD ZAR, is traded in amounts denominated in the United States dollars. Now we have standard lot sizes, which are about 100,000 USD, and mini lot sizes as well, which are about, let's say, 10,000 USD. And then we have the peak value, which is denominated in whatever currency, code currency. and it's calculated dividing 1 pip of the USD maybe chef, which would be about 0.0001 or 0.01, depending on the pair being talked about. Let's take, for instance, the USD chef's current rate. Now, profit and loss are denominated in chef, for example, and for one standard lot position, each pip movement is worth about 10 CHF. Because for one mini lot SPY position, each pip movement is worth one lot of chef. For example, if 1 pip is equal to 0.0001 and the current exchange rate of USD chef is 1.4000, 1 pip of one standard lot will equate to 14 USD, right? Now, margin calculations are based in dollars with a leverage of 100 to 1, 1,000 USD, which is needed to trade 100,000 for USD card. Is that correct? Now, I think this makes a whole lot of sense. Next page, please. Now, having the USD as the code currency is a whole lot of other ballgame, because when you have, for instance, gold USD or GBP USD or Euro USD traded in amounts denominated in euros, in gold, in GBP, the standard lot sizes are 100,000 times, and mini lot sizes are 100,000 times to the code currency. Now, the pip value, which is denominated in US dollars, is calculated by dividing 1 pip of the, let's say, GBP USD, which would be 0.001 or 0.01, depending on the pair, by this GBP USD's current rate. Now, profit and loss are denominated in US dollars for one standard lot position size, because each pip movement is worth 10 USD. Now, for one mini lot position, each pip movement is worth 1 USD, because we have margin calculations based in dollars. For example, if the current rate of, let's say, GBP USD is 0.8900, and you're using a leverage of 100 to 1, you're having 890 USD needed in available margin to be able to trade on a standard lot of 100 times of that code currency. Because, however, the base currency, for instance, GBP USD rate would definitely increase, and we have a large available margin in USD, which is required. And conversely, the lower the rate for whatever currency pair, which is being paired with USD, the less required available margin is needed. Now, USD trading tactics. Now, let's put all of these things we have just learned and come up with some trade tactics for USD. Now, looking at differences in the US economic developments and economic data from other major economies, we can say it's a good way to start trading the USD. For example, a jump in the US retail sales, ugly results on UK employment situation. Reports will be giving you a reason to set the GBP USD. Now, the US dollar index or USDX, which lacks, tracks performance of USD versus a fixed basket of currencies, is also a great employment situation, we have a report which will give you a reason to sell the GBP USD or whatever currency. Now, talks of a Fed front rate hike, which signals the possibility of higher returns on US assets, encourages traders to buy up the USD. And well, of course, we don't usually have a lot of things left behind. We have taking note of the Fed's monetary policy outlook, which is usually part of the Fed official speeches, could yield some clues about the direction of the United States dollars. We have hawkish remarks, which could serve as signals to go long on USD, while dovish comments could also serve as reasons to short the USD JPY. Next page, please. Right. Now, to stay updated with economic developments in the United States, you need to make sure that you follow as much as possible the economic news events that are always being put out on the USD. Now, let's take a little dig on the Eurozone. The Eurozone. The European Union is a brotherhood of 28 member states, which started from a tiny gang of 6 neighboring states in 1951 by the magical powers of the Treaty of that country, and it then grew into a large economic and political bloc, making it the biggest economic region in the whole world. And you talk about playing a huge role in international trade and global economic affairs. Among these